Every investment firm has a beginning. Before the portfolio, before the exits, and before the headlines, there's a learning phase. At venusventure.us, as a new firm, our earliest startup bets are best described as intentional evaluations, small commitments, and deep diligence exercises that shaped how we think about early-stage innovation. Those first 10 opportunities across fintech, medtech, and infrastructure-driven startups taught us lessons that now guide our long-term strategy. The founder matters more than the idea. Ideas evolve quickly. Founders don't. In our earliest evaluations, we saw that strong founders adapt when assumptions fail, communicate clearly under pressure, and, really understand both opportunity and risk. The most compelling teams weren't the ones with the flashiest decks. They were the ones who thought clearly, listened well, and, honestly, executed consistently. Simplicity is a signal of strength. Early-stage founders often overbuild. We learned to, really value startups that solve just one problem extremely well, avoid unnecessary features early on, and can explain their product in plain language. Simplicity usually indicates clarity, and honestly, clarity is pretty rare in early-stage companies. Hype fades fast, but, fundamentals really don't. Some early opportunities, looked really impressive on the surface. We're talking about big markets, hot narratives, and aggressive growth projections. But when fundamentals were weak, like if there was unclear monetization, regulatory blind spots, or just fragile unit economics, the excitement honestly didn't last. These days, we treat hype as neutral, not positive. Compliance is an advantage, not a burden. And, this lesson came up over and over again in both fintech and medtech. Startups that, respected regulation early, built compliance right into their product design, and spoke honestly about their limitations were just far more credible than those that planned to, figure it out later. In regulated industries, discipline really does create defensibility. Timing matters more than speed. Honestly, several ideas were technically impressive, but just a bit too early. We learned to ask ourselves a few key questions. Is the market ready now? Are customers already looking for this solution? And what has changed recently to enable adoption? Being early and being wrong often look the same to investors. Infrastructure scales quietly, but honestly, it lasts a lot longer. Some of the best opportunities weren't consumer-facing at all. Backend infrastructure startups, like APIs, data layers, and workflow tools, often had longer sales cycles, showed slower early traction, but, demonstrated stronger long-term potential. These businesses don't chase attention, they earn dependency. Transparency builds trust way faster than optimism ever could. Founders who openly discussed risks, gaps, and unknowns really stood out immediately. Overconfidence, on the other hand, definitely raised red flags. Honest founders just made better partners. At Venus Venture, trust is actually more valuable than perfect forecasts. Capital efficiency is honestly so underrated. Startups that did more with less consistently outperformed expectations. We definitely took note of teams that controlled their burn rates, prioritized revenue early, and, avoided those vanity metrics. Capital discipline tends to compound over time. Strong teams, they think beyond the pitch. The best founders didn't stop thinking at fundraising. They asked themselves, how do we scale responsibly? What breaks at 10 times growth? And where do incentives misalign? Strategic depth really matters, even early on. You know, one of the most important lessons was restraint. It's okay to say no, often. Not every good startup is the right fit. As a new firm, we learned that saying no protects focus, capital, and reputation. Selectivity isn't a weakness, it's a strategy. Our first 10 startup evaluations shaped how Venus Ventured US operates today. They reinforced a simple truth. Successful early-stage investing isn't about chasing excitement, it's about building conviction through discipline. As we continue forward, these lessons remain foundational to our